Good day. Today I want us to focus on the Sars income tax. So when we are talking about the Sars income tax, what are we talking about? Okay, so and how to record it. So this is the tax that we are paying to Sars, right? So I want us to come and record it here in the general ledger. Sars income tax. Now, just go and check if there is a transaction affecting it. So you can see that we don't have its opening balance, right? But if you can check here on June 2020, there is a provisional income tax. Now, if they are saying provisional, what do they mean? So there is a system which is a provisional tax. It means that the company has to pay the tax every 6 months. Every 6 months of the financial year, they have to pay the tax. That is what it means. So we paid 30,000, the first one, half yearly, right? So if we paid the income tax, so we need to come and record that on the debit side of the Sars income tax. So right bank. So because we made a payment, it's going to be CPJ. We made a payment of how much? 30,000. Alright? So we're done with this one. Let's check again which another one affects the tax. On the 1st of December, a second provisional tax. Like I said, the business has to pay the provisional tax two times. At mid-year and also at the end of the year. So that is why they've also paid again at the end of the year. So this is 01 December 2020. So it's bank CPJ. We paid how much? 70,000. Right? Which other one affects the income tax? So here we are told that income tax is calculated at 20%. At 28% of the net profit. 28% of the net profit. So when we are recording the income tax in the Sars income tax, we need to come and record it on the credit side, Sars income tax. So at the end of the year on 31 December 2020. Now, it is GT because in here, for this income tax, we are not making a payment. We have already paid the income tax on the debit side. We've already paid it to Sars. It is just that the one that we're going to record here on the credit side, it is the accurate amount of the tax that you are supposed to pay. So actually the provisional tax, there we are just estimating that maybe the income tax after net profit, it is going to be this much. But if it happens that you have paid below, so it means that you still need to pay Sars. So let's do the calculations. So it is 508,000 multiplied by 28%. That is going to be 142,240. Right? Now, let me explain this. If Sars income tax has a credit balance, it means the business is owing Sars money. If Sars income tax has a debit balance, it means Sars is owing the business money. Let me explain it again. If Sars income tax has a credit balance, it means the business is owing Sars the money. Okay? If it has a credit balance, it's a liability if it has a credit balance. But if it has a debit balance, it's an asset because Sars is owing the business money. So here we can see that the bigger side here, there is the credit side, which is 142,240. 142,240. So the difference here, that is 42,240. So this is a balance credit down, which must be transferred to the opposite side at the beginning of the following month. The following month is 1 January 2021. The balance brought down, which is 42,240. So it is supposed to be like this. That is your Sars income tax. So it has a credit balance, meaning that the business is owing Sars money.